John Jenkinson with you. The export inspections were out earlier today. Didn't have much of an effect on the markets. Corn market has been trending about 1 to 2 pennies lower through a good part of the session after being even sharply lower than that on the overnight trade. July down 1 3/4, 324 off of the low. December down 1 1/2, 337 1/4, again off of the low. In fact, both of those numbers just about in the middle of the trading range of the corn market. And over the soybeans, we have backed off some of the earlier gains. We've got July now steady at 840 3/4. We got as high as 849. November is up a half now at 852 1/4. Both of those were actually higher earlier in the day today when we had a little bit more strength in the soybean market. Soybean meal down just 10 cents now at 283.10. And of course, that is per ton. Soybean oil is up 30 cents a hundredweight at 27.68 right now. Over in the wheat market, Chicago wheat for July is down 3 1/4 at 517 1/2. And again, this is just about maybe just a little bit higher than the middle of the trading range. Got as low as 511 1/2. Kansas City wheat market, we were as much as 11 cents lower earlier in the day. July, Chicago now, or Kansas City, I'm sorry, down 7 1/4 now at 463 1/4. Got down to 457 3/4. So wider trading range there with a little bit more pressure in the Kansas City wheat market. And July spring wheat, Minneapolis wheat, down a complete nickel at 520. The September's down 4 3/4 also. Checking on the cotton. Now the cotton has been a little bit different today. Even though China has asked some of their state firms to stop purchases of some United States farm products, cotton has actually rallied here just a little bit and continued to do so. We came all the way from 57.26, now trading at 60.11. That is up 252. And Brian Hoops is here with us to talk about all of these markets. Any surprises over here in any of the action that we've seen so far in the grains, Brian?
You know, I'm really glad to see, John, and good morning, good to talk with you. Good to see that these markets are trying to bounce in here. You're right that China has indicated that they are not going to buy any U.S. products, but this is only for state-run companies and not the private agencies. So there's still possibilities that we'll see some Chinese business. This is also very likely it's just going to be temporary in nature, and that they will come back at some point in time, maybe after prices move lower, and step in it and do some more purchases. So I think the market initial reaction was what we saw to end the overnight trade, where it looked like China was just not going to buy anything from the U.S., but now as more details has filtered in, it does allow that China will buy from U.S., but it's not going to be their state-run companies for a period of time, but private agencies still will.
Well, Brian, even if the state-run independent agencies, as you were just mentioning there, even if they said that they are not going to buy from the United States, where else are they going to be able to buy the amount of soybeans that they need if they're actually rebuilding their hog herd? Because isn't South America starting to run a little bit low in the bin for some of their supplies?
Yeah, that's what we've heard. So far, South America may be getting, somewhat sold out, and so they may have to come to the United States. And that's usually their trading pattern is, during the spring time frame, they don't buy a tremendous amount from the United States because they are buying South American supplies. As we get into the summer, those supplies dwindle. They come back to the United States and do more purchasing. And, they're going to need to, according to a lot of our indications and our records, they're to their slowest pace as far as buying U.S. products since 2007, despite their pledge to buy more products from the U.S. in their Phase 1 trade agreement. So, they have a lot of ground to make up if they're going to meet or come anywhere close to what they had indicated they would purchase from the United States.
Okay, Brian, we'll come back in just a moment and talk about what's going on in the livestock trade. Stay with us here on RFD TV and Rural Radio 147. Let's take these one at a time here as we go visit here to talk about the livestock market. Over in the live cattle, that's where we get started first. Brian, right now, June is down $1.17 at 98.55. August down 47. October, though, is up 12. We had strength over here in this earlier. Now the show list is out here today.
This morning we had, a lot of weakness, John, coming near last week's lows, and then we started to see a little bit of a bounce, but kind of a cautionary tale on this bounce here. It's led by those bear spreads. June is still down $1.17, but October's up 12, and that's what we mean by an example of bear spreading, where the front months are not leading this charge higher, and so that makes you very cautious, even in a rally like this, that we're not going to be able to maintain this type of strength because of the bear spreads that are in effect in this marketplace. So we have option expiration Friday, first notice day next week against the June futures, and there's a lot of indications these cattle are going to be too heavy to meet delivery specs, and so that is going to take a little bit of optimism away from the cash markets this week.
All right, feeder cattle market over here. It was higher by at least $1 on most of the contracts. That August is up 97 at 136.32, but the September up 147, the October up 165. Your thoughts?
Yeah, there's another example of bear spreading. Great to see a bounce here in the feeder cattle, but we wish it was led by those front months. That would be a more positive indication that this rally is going to have some legs rather than just being a little technical bounce that I think is what we're seeing right now.
Okay, hog market. The hog futures market is lower. June now down 210. So is this related to that news from China?
Yeah, very, very concerned about this hog market, continuing to fall here. Product values are softening, cash markets are weak, and, just doesn't feel like this market has enough fundamental support to encourage speculative buying, and we're seeing some of the long liquidation by some of these fund traders weigh on this marketplace.
Okay, Brian, sure appreciate it. Brian Hoops here with us. Christina, there is the latest from the market desk.